Good morning, everyone. I'd like to say thank you to Jack, Gina, Dan, and the rest of the board for bringing in myself and my colleagues from MBA Investment Bank. We're really excited for this opportunity you have in front of you with the current offer on the table, but more importantly, the generational wealth this could bring and the importance of family cohesion throughout this process. We keep family in mind first and want what is best for you and your entire family. I wanted to start with introducing our team. The team we have assembled today best suits your family and your organization. With over 30 years of combined experience within M&A advisory services, this team has extensively focused within the telecom, mobile, and broadband industry. My name is Mason Hogue, and I'm a managing director in mergers and acquisitions at MBA Investment Bank. I've been in my current position for the last 10 years with a primary focus within telecom, mobile, and broadband. I've worked directly with many of these strategic buyers in the acquisition process, including transactions within Broadbandco and Verizon from the buy side and sell side.
Hey all, thanks again for having us out today. My name is Luke Malsop. I'm a managing director in leverage finance. Similar to Mason, and as you'll hear from Adam, I have deal experience across various industries and have worked with different types of buyers, and I'm primarily involved in debt capital markets, structuring secured note offerings, and interfacing with financial buyers.
And I'm Adam Pagan. Hey, everybody. My current role, I'm managing director for the TMT group here at MBA Investment Bank, where I lead the technology, media, and telecom team. Before this role, I worked in various leadership positions in the telecom industry for 15 years before joining the team here at MBA Investment Bank. With this next slide, we just wanted to showcase and talk a little bit about our deal experience. Our deal experience includes several transactions in the triple play broadband provider business. Recent sell-side transactions that have been announced include a $180 million deal with AT&T and a $155 million deal with Brazil Telecom, both of which included purchases of rural triple play broadband providers as part of an entering new market strategy. We've provided both, we have experience with both equity and debt raises, as well as M&A advisory services work, and we know how to get deals done. We've worked on both the buy side and the sell side, and we strive to be as efficient as possible in our processes and negotiations all the way to closing. Let me just say that I don't think you're going to find another team that's going to work as hard to advocate for you and your interests, and we are excited for this opportunity.
Great, thanks, Adam. Before we get stuck into the offer here, we think it's important to cover some market and industry trends and their impact on Broadbandco. Despite the economic downturns, we believe the industry is weathering fairly well. Providers are posting steady subscribers and steady profits. We believe this is largely driven by cost-conscious consumers who are shifting away from out-of-home, more expensive options for in-home, cost-friendly entertainment options. We're also seeing triple play providers taking market share away from DSL. And now more than ever, we believe that larger cable providers have more bargaining power and can leverage their base for reduced programming costs. Broadbandco is no exception, given their revenues of $5 billion and vast coverage across the United States. We believe they're looking to capitalize on these trends through an acquisition to achieve operational synergies, grow their margins, and potentially receive analyst coverage. All this is to say that, unlike other types of buyers, Broadbandco is uniquely positioned to maximize the value of PureScope. As we take a look at the offer on the table, we see the face value of the offer is at $170 million. The purchase consideration here, it's $35 million in cash, stock valued at $35 million with 3 million shares trading around $12 per share currently, and then a $100 million par value seller's notes with 7 years to maturity and a 5% pay-in-kind security. We ran the numbers and conservatively priced this offer closer to $98 million. Although the cash is worth the $35 million, we don't believe the other two are worth their full face value. We feel the stock is worth closer to $10.5 million because of the restrictions on selling for 1 to 3 years and then potential issues for selling all of the shares. As for the seller's note, we took into account the bullet principal repayment as well as the 5% PIK and discounted it back from 7 years to today and value this consideration at $53 million. Taking into account these purchase price considerations, we arrived at a $98 million equity value for the deal. As we pivot slightly, we see the face value of the offer. That full $170 million would have been a great price for PeerSco, coming in above our estimated fair value. As we dig in here, Adam is going to start us off with a high level overview, and then start us off with market-based valuations.
Thanks, Luke. So just on this slide, you can see where the current offer stands, indicated by that blue line, right around 100 million. That's where we valued it. And you also see our estimate of fair value range, which is indicated by this light gray shaded area, which is between 145 and 160 million. And that is for equity value. We use 4 different methodologies to find fair value of PeerSco: public comps, transactions, DCF, and LBO. The fair value range for equity between 145 and 160 million is substantially higher than the current offer. So let's go through each. Public comps. Those are based on size and sales, margins, growth prospects, and business profile. And these ranged from 111 to 140 million. You guys can see this on the left side, the blue box all the way on the left. The second from the left is transaction comps. You can see these have traded at a premium. We screen these by size and sales, margins, and recentness of transaction. And we feel that we believe with a strategic buyer, we'd be able to get a premium value closer to this range. The range we are showing here is 154 to 168 million. Luke did the income-based methodologies.
Yeah, so as we look at the income base, we did 2 different valuation techniques for the intrinsic value of PeerSco. The first being a discounted cash flow, which takes into account management's projections and looks at those values in terms of today's dollars. As we can see, this is in line with the market valuations and is valuing PeerSco between 127 million and 141 million dollars. We also ran a model with synergies that elevated this range by about $20 million. We also understand your guys' interest in private equity groups. So with that, we ran an LBO model. We understand that you guys are hoping to maximize your value and believe that a private equity group or a financial buyer might be the best route. But after we ran the numbers, we quickly realized that this type of buyer is not a viable option, given their targeted returns, their rates for borrowing, and then the debt that would be tacked onto the company. Those things considered, we arrived at a range here of $78 million to $86 million. Like we said, we firmly believe a strategic buyer, similar to Broadband Co., is the best option for PeerSco. As such, we've excluded the LBO from our considerations for fair value. And based on the 3 other valuation techniques, public comps, transactions, and then the DCF, we arrived at a fair value range of $145 million to $160 million. Mason's going to talk us through our recommendation and then some of the alternatives that are on the table.
Thank you, Luke and Adam, for taking us through that fair value analysis. Now, given that current analysis we currently have an offer on the table for Broadband, I wanted to take you through our recommendation as well as some alternatives that are on the table. We would recommend engaging with Broadband as they're a motivated buyer who notably has finished second on a couple of different acquisition attempts. And with the right purchase, they could start to get analyst coverage. This is also an opportunity to create liquidity for the family and options that would satisfy the desires of the entire family with a higher certainty to close. Now, with any targeted sales process, there is this potential to leave money on the table. But that is where we at an MBA investment bank and the team bring value to ensure that we get the best value for your company and do it as best for the organization and the family. Although this is our recommendation, we understand there are other alternatives that are on the table, and we want to lay them all out for you. There's the option of doing nothing, and continue to do business as normal. Pierce Co has strong cash flows, profitable company with very little competition in their rural region. Although they do not have much competition, as you all understand, there is a need to raise capital to do any more expansion with their area. With a good offer on the table and the family's best interest in mind, you would also be passing up an opportunity with a strong strategic buyer. Now, I want to take a step back. Along with a doing nothing, we looked at what a recap would look like to offer for a special dividend. But with the debt and the current cash on hand, we would need to take an excess amount of debt to be able to fund something like a recap. Doing so, we'd be over leveraging the company and putting a lot more unneeded risk on the organization, which would risk any opportunity for growth or potential of acquisition in the future. Lastly, there's also the option of engaging in a broad sale process. This allows for a competitive process to gain interest from many different strategic buyers, which also can help drive the value of the company up. Now, with that, a two-step approach to a broad sale process extends that timetable for the transaction with a more uncertainty to close. Going to a broad sale also makes it more difficult to preserve confidentiality as materials are sent to prospective buyers. Although there are alternatives on the table, and us as expert within the industry, we reiterate that we recommend that you engage with Broadband Co. We understand the motivations on both sides, and we can use these to maximize the value during the negotiation process. Now, although we do believe that the current offer is not reflective of Pierce Co.'s fair value, we would counteroffer with $170 million in cash. We understand that they offer the same price, but with considerations that are valued at much less, and we want to have an all-cash offer. Now, as an organization, we understand what this liquidation event would do for multi-generational wealth and the different desires within the family, with the most important being family harmony. With our expertise, we would ensure that everything is done with the best interest of the family. Within the negotiation process, we would advise that Dan stay on as the business unit lead, as we understand Dan's desire to lead the organization moving forward. Now, upon engaging with us, we're going to get started right away. We'll reach out to Broadband.
Nathan, I'm sorry, this is Dominic. Can I just ask a quick question on the previous slide? You guys mentioned that you guys could provide value by minimizing the potential to leave any money on the table. What are some of the ways that you guys plan to do that?
So that with that, we can understand the synergies and the value of a discounted cash flows of the intrinsic value of the company, as well as the premiums of the transactions that have currently taken place. And we can see that these larger broadband companies are coming in and paying a premium to expand into these rural areas. Broadband was already going to offer $100 million or going to do a $100 million expansion to try to gain into these. And that would be a leveraging point for our negotiation process. And also with that, within our experience, we have an understanding of what the fair value is. And if it goes below a certain point and a negotiation within Broadband, we have a contingency plan to then take it to a broad sale to be able to bring the best value out of the company if Broadband does not negotiate with what we're putting in place.
Thank you.
Thanks for the question. Yep.
Yeah. So upon engaging with us, we're going to get started right away. We'll reach out to Broadband. We'll get that NDA signed and submit our counteroffer of that $170 million cash. We would then get an LOI signed, so we're able to move forward with any outstanding due diligence, as well as develop a data room and give them access. Now, once we agree on a purchase price and details, we'll enter exclusivity with Broadband and perform all that due diligence and management presentations needed and bring the final offer to the board to vote. We would expect to land anywhere between $170 million and $155 million, where anything below that, we would go to our contingency plan that I'll mention below. Once we've reached board approval, we'll go through all the legal paperwork and agreement to make sure everything is signed and completed. We want to move quickly and efficiently as possible to get this process done within a 1 to 3 month window to ensure the confidence to close. Now, lastly, throughout all of this, with any targeted sale that has negotiations that I mentioned, there's always a chance that we do not agree on a purchase price or something falls through before the agreement is signed. Now, this is why we'll have a contingency plan for the off chance that the deal falls through. We'll be developing a SIM, confidentiality agreements, and creating a potential buyer pool. Now, we don't anticipate this to happen, but in that case, we want to ensure a plan of action to quickly and effectively move forward right away if anything falls through with broadband. Now, on this last slide, we wanted to give you an overall executive summary for all that we've gone through today. For easy reference point, we're going through back for you going back through on your deck, just to make it as easy as possible. I want to conclude by saying that all of us at MBA Investment Bank will ensure that your family's best interests are in mind throughout this entire process and the deal gets done that is good for everyone involved. This is a really exciting opportunity for your family, and the multi-generational wealth this could provide all of you. We're really excited for this opportunity, and we look forward to meeting with you in the future, and we can't wait to get started. Now, thank you, and do you have any other questions?
What would you charge to for the engagement?
So our fees are at a 1% or 100 basis points up to $100 million. And then anything over the $200 million would be a 2.5% or 250 basis points. So we'd be probably looking at that 1% or $1 million range for just our transaction fees.
Thanks.
I like your idea of trying to get all of this price in cash. I mean, that makes me feel a lot better than this complicated structure that they proposed. But what might be the hurdles for them in terms of delivering on our request? What do you see as maybe their pushback on that?
Now, we do understand that there is potential pushback, especially with what they offer and the current debt that they do have on hand. With them being a $5 billion in revenue company and already looking to expand with $100 million expansion into a rural area that they were already going to spend, we don't think that they have any other issues with coming up with that available cash, as they are that motivated buyer. They want to gain that analyst coverage that would help boost their stock price moving forward with the right acquisition. So we believe, with all that in mind, that although they offered a lot of considerations prior, that ultimately they will be able to land on an all cash purchase price.
Thank you.
Are there any other questions?
Okay, thanks guys.